It's no secret that one of the most disruptive things that crypto has done is disrupt the financial system. And of course, we in crypto like to call that DeFi. Now, if you follow this channel quite a bit, you will know that I am mostly talking about early stage investments and where I place my bets. But I think it's extremely important to tell you guys a bit about DeFi and how you can earn passive income through crypto DeFi. So to teach us all about earning passive income through crypto DeFi, we're gonna bring in industry expert Kris McCauley. If you're excited to see Kris talk about passive income through DeFi, smash a like on this video, guys. Let's get to 500 likes on this video and let's get into it. All right, guys, we're welcome back Kris McCauley today. We had him on before. If you didn't watch that, make sure you go check it out. The video on earning passive income through nodes. And I thought it was super, super interesting. So I wanted to bring him back today to teach us a little bit about DeFi, yielding, passive income, and DeFi, things like that. Since I don't really talk about that much on the channel here, I'm more of an early stage investor or finding gems and investing in the tokens. But I do think that earning passive income is super important. And in fact, I would love to learn a bit more about it. So Kris, thanks so much for coming on, man. Appreciate it.
Yeah, thank you so much for having me on. I really appreciate it.
So Kris, from, I watching your videos and things like that and see that you make a lot of videos on, well, first e-commerce, where you kind of came from traditionally, and then try to get into crypto and talk about nodes and DeFi and passive income. And has that been pretty successful for you? And would you say that you've had more luck with passive income on DeFi or nodes?
I would say DeFi as a whole. I think some of my best investments are nodes, like some of the top tier nodes, but nodes is just one little slice of the whole DeFi pool. So I would say like DeFi as a collective for sure.
So on DeFi, you always hear about things like would you consider yourself a degen?
It's what a lot of people want to talk about on YouTube. I would say max of my portfolio is 10% degenerate. Like crypto, the odds are already against all cryptos, but this is where like probably 9 out of every 10 projects will fail. It might even be higher than that. I don't know.
Yeah, I would say that you're definitely right on that one for sure.
Yeah.
So when we talk about DeFi, I think there's a lot of different things that you can do in DeFi. What do you mainly focus on?
I like to mix it up, right? Like I first like to look at the different chains, like the different layer ones. And then I like to see, okay, what are the opportunities on those chains? I mean, because there's yield farming, there's passive income NFTs, and then there's like hedge funds of projects that you can get into. I mean, there is so much going on. And my channel just is like the tiny little tip of the iceberg.
So do you participate in all those things you just mentioned?
In some degree, yeah. In some degree, I do. I mean, it's I'm not like going big in really one, but like I like, if I see something I like, I'll research it and then jump into it for sure.
So what do you think are some, for those who are watching and maybe haven't done anything to earn any passive income in the DeFi space, where would you recommend that they start to learn?
Yeah, I mean, just my channel on YouTube is Kris McCauley. My Twitter's Kris McCauley, but like, I think it's so awesome for people to just go like my channel should just be like very supplemental, and you should be doing like know where to start. And I think DeFi Llama, that's the website, is an amazing place to start. Like they do such a great job at congregating the data there.
What are some other good, pretty conservative types of DeFi plays?
Well, I mean, it's the ecosystem itself, right? So like in terms of the ecosystems that have a lot of DeFi on it, it's not really going to be anything that anyone hasn't really heard of, right? So there's like AVAX, Phantom, Kronos, BNB, Ethereum, Near Protocol. I mean, there's more than that. But the thing is like trying to find these ecosystems where developers are going in and creating projects, because really we're new. Like on DeFi Llama, Near Protocol, they only have 35 projects listed. We're still so new, and there's still so much coming to the different layer ones.
When I first got on DeFi, it was really confusing and a bit intimidating. So maybe you've discovered some protocols that are kind of beginner friendly.
This is good to know. Like this made me feel better when I was first starting. Is that if you know how to work one, you're pretty much going to know how to work everything. Like they're all generally the same. You got to hook up your MetaMask or Trust Wallet or Ledger to the DEX or the aggregator, wherever you're at. And then from there, it's just knowing how to buy the tokens, getting them in your wallet, and then just hooking it up to the exchange.
And how about yield farming? And can you explain a little bit what that is, and then what kind of risks are involved with it?
So yield farming, essentially what you're doing, and there's a few different reasons for yield farming existing. But a lot of the times though, when it comes to these like staking or liquidity pools and yield farming, these exchanges that are operating, they need liquidity in order for them to function, because without there being a pool of tokens for people to buy and sell from, it won't work. And so essentially, if you like stake or provide liquidity, then you are rewarded for locking up your asset, right? And so there's single pair pools, so you could take in, like for example, Bitcoin and stake that and earn that. Or you can do multi-paired pools where usually have higher percentage interest, but there's more risks involved. And the main risk, what you're going to see is it's this term called impermanent loss. And there's pools that prevent impermanent loss from happening, but just go into it thinking that this could happen to you at any given time. So I don't really partake in too many multi-paired pools. I would say the majority of my yield farming is single pair poolings. And then the biggest risk there is just the token going down.
Yeah,
that's the biggest risk. So you want to make sure you're investing in any good project, but it kind of gives you a buffer where it's like, oh, you earn 28% a year. Okay, now you have a 28% leeway on that for a year, which I don't really care if it's something that I believe in long term. So that's kind of how I'm looking at it, I guess.
So on the yield farming side, you're getting the rewards from the project, but you're also making a percentage of the DEX fees as well, right?
Yes. Yeah, you're exactly right. Yeah. So like if you're on Sushi Swap, they might be like, oh, here you go. Like there were this many people who entered here, and today we'll reward you guys as well. So yeah, it's important to understand that before you get into any type of pool, because they differ.
And the risk of a permanent loss that comes if you're like trading X token against ETH or something, and the value, if that token goes down relative to ETH, but not, I mean, if it goes down, if they both go down in values exactly above 15%, you're still going to be able to pull out the same amount of tokens you put on each, right? So it's really,
exactly.
The risk is if that token goes down relative to the trading pair price. I think that there's been a couple of different applications or something that come out that have helped make that journey easier for those people who are really like trying to yield farm all across the board and then take liquidity, put it here and there and there, and like just go to whoever's offering the highest kind of and bouncing it around. Have you done anything like that?
My favorite yield optimizer is probably Beefy Finance. And the reason why I like Beefy so much is that they have probably over a dozen different protocols on there. And a lot of the times the APYs on there are higher than the actual site themselves. It's been around for a while. And I would say Beefy is where I go a lot of the times.
That's really good advice. For anyone watching this like now, time sensitive, anything that you're really interested in and looking at right now?
The one that I'm like really big on is yield nodes. And that's not really a token, but it's in these types of markets that we're in right now, I think it's the safest play. And then also too, what I'm looking at is I go to DeFi Llama, I check the different layer one, and then I want to look, okay, what's the biggest DEX on that layer one? And then I want to scoop up the token of that DEX, because if we see what happened with Binance, right, and BNB went from in 2017 like $20 to what it is now, I don't think it's unreasonable to think that something similar couldn't happen in the next bull run, even if it's in 2 years. Like on Avalanche, the main exchange is Trader Joe's, so it's like the Joe token. I think maybe it picks up, so I'm like trying to scoop up, even if it's just a little bit of each one. I think is trying to hedge my bets that way as well.
But you think it's a fair comparison to talk about a centralized exchange like Binance to Trader Joe's, which is a DEX? And the different utilities that BNB coin had versus something like Joe has?
I mean, I don't think it's going to reach the degree at which it is, but I mean, I'm interested to know, like, what role will the DEXs play the next time there's a flood of new investors, which we're clearly not there yet. So
I mean, I think they're gonna get better and better and better. And like I always prefer trading on a DEX, if not like just not even for like philosophical reasons, but just because I think it's super convenient. You have to sign in, use your 2FA, all that stuff. It's just quicker and easier for me. So I think that the more that they evolve, and the more functionality that's built in, now we're seeing kind of some dexes with like order books and limit orders, stop losses, like concentrated liquidity, things like that, which as they evolve, I would imagine that, and you don't have to be approved and spend a bunch of money to be listed on a DEX, for example. So I think that you're absolutely right. As long as the DEX has, good functioning token utility built into it, that maybe is somehow correlated to the amount of users that they get, make token value go up. But you can look at Uniswap, which is a, huge valuation right now, $7 billion, and just simply a DEX on Ethereum.
Yeah. And it's like you said too, like how they evolve is going to be dependent on that protocol itself. Like if Phantom ends up going to zero, it's like the stuff on that ecosystem probably is going to feel it to some degree as well, like all the projects.
Yeah. So, I mean, comparison like Joe that you're talking about right now is a $450 million fully diluted valuation. So, you've got many multiples to go before it achieves.
It's still small. It's still like not huge by any means. Yeah.
Yeah. Okay, cool. Kris, thanks so much, man, for teaching us that. Really great information. Again, guys, if you want to, I definitely suggest that you go follow Kris on YouTube and Twitter as well.
Yeah, just my name. You can find me on any social media, just my name.
Thanks, Kris. Appreciate you coming on.
Thanks a lot, Kyle. Appreciate it.
Bye-bye. That was Kris, ladies and gentlemen. Let me know in the comments below what you thought about this. Are you planning to use some of these things that you learned today to earn passive income in crypto? Let me know in the comments below. I'm very curious to hear what you say.